It's June 26, 2020, the last day for the week in terms of activities and, of course, the economy, political space, and investments and policies continue to become our prior focus when we have to do this conversation. And today we're giving you updates, insights from analysis reports from the Economics, and also updates from international financial institutions like the International Monetary Fund and the World Bank. Let's begin with updates from the International Monetary Fund. Looking at the global financial stability update at a glance, it says that risk asset prices have rebounded following the precipitous fall early in the year, while benchmark interest rates have declined, leading to an overall easing of financial conditions. Swift and bold actions by central banks aimed at addressing severe market stress have boosted market sentiments across the globe, including in emerging markets, where asset purchases have been deployed in a number of countries for the first time. Other financial system vulnerabilities may crystallize by the COVID-19 pandemic. High levels of debt may become unmanageable for some borrowers, and the losses resulting from insolvencies could test bank resilience in some countries. Some emerging and frontier market economies are facing refinancing risk, and market access has dried up for some countries. Central bank measures have been a major factor in the market recovery. For example, in the United States, the turnaround in risk asset prices occurred around March 23, 2020, following the announcement by the U.S. Federal Reserve of a $2.3 trillion in crisis-era credit facilities. Higher-rated countries have also been able to issue hard currency debt at a historically high pace so far this year, faster than economies with lower credit ratings. This difference underscores the external pressures that some emerging market economies are still facing. This broad recovery In addition, investors apparently expect unprecedented monetary policy accommodation to continue to support the global economy for quite some time. Actions by central banks have boosted investor risk appetite. Policy rates in a number of countries have been cut further, and investors expect interest rates to remain at very low levels for several years. Balance sheets of advanced economies' monetary authorities have swelled following new rounds of asset purchases, liquidity support for the banking system. The US dollar swap lines and other credit facilities intended to sustain the flow of credit to the economy has continued. Aggregate assets of the group of 10 central banks have increased by about $6 trillion since mid-January, more than double the increase seen during the 2 years of the global financial crisis for December 2007, with the rise in assets accounting for almost 15% of the G10 GDP. A number of emerging market central banks have embarked on unconventional policy measures for the first time. In some countries, these asset purchases programs were started to support monetary policy. In other countries, the motivation was to support market liquidity. These programs have included purchase of a range of assets, including government bonds, state-guaranteed bonds, Financial authorities have also bolstered market confidence through a series of policies, including government credit guarantees, support for the restructuring of loans, and encouraging banks to use available capital and liquidity buffers to support lending. And this can also be seen on the IMF policy tracker. The combination of unprecedented policy support appears to have successful in maintaining credit flows. The lift to investor risk appetite When you look at further of that story, you can log on to our website, www.prochange.com, to look at the IMF report on global financial stability. Let's take a look at the World Bank as it looks at Nigeria's economy and the rebuilding process. The latest economic analysis for Nigeria says managing and recovering from the impact of the COVID-19 pandemic and the associated oil price shock will require the government, public, and private sectors. This has been on the front burner of discussions when you talk about the PPP. With as many as 5 million people who could be pushed into poverty, the report recommends policy options that can help mitigate the effects of the crisis and lay the foundations for a strong economic recovery, generating more jobs and improving employment. Beyond assessing the economic and social impacts of COVID-19, the report analyzes the impacts of the 2019 land border closure, the opportunity to promote agribusiness for food security and job creation, remittances, and the diaspora for development. With the uncertainty of the long-term economic impact of the global COVID-19 pandemic, a new economic analysis says the speed, quality, and sustainability of Nigeria's economic recovery will be determined by the effectiveness of its government response. And just to take a note that the federal government, through the Federal Executive Council meeting just this Wednesday, approved 2.3 trillion naira stimulus to stabilize the economy. So response is very critical at this time to the economic sustainability plan. The Nigeria Development Update says the global spread of the pandemic and the subsequent collapse of international oil prices are destabilizing Nigeria's macroeconomic balances. Before COVID-19, the number of Nigerians living in poverty was expected to increase by about 2 million. If Nigeria manages to contain the spread of the virus. Don't forget that the National Bureau of Statistics had released a report recently that says poverty has risen to 40.1%. That translated to 82.9 million. So if this is the case, we will have to address the poverty status in Nigeria. Taking a quote from the report, it says the unprecedented crisis will require an unprecedented response from the entire Nigerian public sector in collaboration with the private sector to contain the outbreak, save lives, and protect livelihoods of the poor and vulnerable, said Marco Hernandez, the World Bank lead economist for Nigeria and the co-author of the report. The report discusses policy options in 5 critical areas that can help Nigeria recover from the impact of the COVID-19 pandemic. Containing the outbreak and preparing for a more severe outbreak is the first step that must be taken seriously, and we've seen a lot of activities from the Federal Ministry of Health, the Nigeria Center for Disease Control, and even subnational, that's state governors, but more has to be done to contain this pandemic. Enhancing macroeconomic management to boost investor confidence. Like I said earlier, the federal government has brought out the Economic Sustainability Plan, and it has approved 2.3 trillion naira stimulus, but more effective macroeconomic management will be key to incentivize investment and boost investor confidence. Safeguarding and mobilizing revenues. Like reports have had it, the International Monetary Fund says Nigeria's challenge is not really of debt, but a revenue challenge. So diversifying our revenue, having gone through this cycle of over 3 decades of dependency on crude oil, is not just a wish list, it's a must-do list, and it's imperative that the whole framework is leveraged to achieve this. Reprioritizing public spending to protect critical development expenditures and stimulate economic activity. Obviously, the Vice President, Professor Yemi Osibanjo, Chairman of the National Economic Council, and also a key player in the economic management process, alongside the likes of Dr. Doyin Salami, chairman of the Economic Advisory Committee to the President, have their work cut out in this regard, because economic policies that can stimulate economic activity in the country is very critical now. Protecting poor and vulnerable communities. I would say that in this regard, we've seen a lot of investment, social investment from this administration, but the place of transparency, the place of cohesion, the place of leveraging data effectively to reach out to the real people who are classified as poor and vulnerable is very important to boost confidence of citizens that indeed, even if we say 200 billion is spent every year, they are seeing the impact. We are seeing people are receiving and beneficiaries, and that can be verified. We call for more transparency and engagement with the public from the government on how it is carrying out its activities to boost confidence and trust in the process. Beyond assessing the economic and social impact of COVID-19, the report also recognizes the need for vital policy reforms to support economic activities in the country. That has become very key as we continue to assess how governance is playing its role in reforming the economy, and as we continue to look forward. And job creation, job growth, supporting economic growth and job creation over the medium term has become very imperative. Selected reform areas discussed in the report include a focus on addressing smuggling as part of a broader agenda around facilitating trade, improving security, and preventing counterterrorism, as well as investing in labor-intense agriculture infrastructure to provide for short-term jobs. This has been discussion around the agro sector. We need to ramp up activities there. Agriculture plays a key role in our economy. The growth for first quarter 2020 was 2.2%. There's a lot that can be done because we see it as a major player in this administration's plan to diversify the revenue base of the economy. Reforms also include increasing the processing capacity of agricultural produce by farmers and producer organizations, encourage the return of skilled immigrants, and improve channels for safe, regular, and orderly immigrations for Nigeria's development. Very important for all ministries concerned. With reforms in these and other areas, such as within the energy sector, which is very critical in terms of infrastructure, power, the report knows that Nigeria would be able to mitigate the negative effects of the pandemic while generating more jobs and improved employment. Before COVID-19, Nigeria's economy was gradually recovering from the 2016 recession. Although per capita incomes were still falling because economic growth lacked population growth, Nigeria's GDP growth rate improved slightly in 2019, reflecting rising service output. On the supply side, growth was mainly driven by the services sector, which represents about 50% of the country's gross domestic product. The principal performers here were telecommunications and financial services, which expanded in part because of policies aimed at increasing credit to the private sector. Agriculture and the oil industry also contribute to growth positively, despite the introduction of an OPEC cap on oil production. On the demand side, growth was driven by strengthening investment and growing net exports, which more than compensated for still declining domestic consumption, as the growth rates at that period, 2.2%, remained below the population growth rate estimated at 2.6% per year in 2019. In 2020, in a baseline scenario, the economy had been forecasted to contract by 3.2%. This assumes an annual average oil price of $30 a barrel. It also assumes that the spread of COVID-19 will be contained in Nigeria by the third quarter of 2020. High level of optimism. This revised growth projection is more than 5% points below the pre-COVID-19 forecast of moderate 2.1%. This will make the predicted 2020 recession at least twice as deep as that of 2015 to 2016 and the deepest since the 1980s. Economists have warned that we may go into depression as the economy contracts. We don't really want to experience that, but that is a very serious call for action from our policy makers and all stakeholders. Let's go on a short break, and when we return, the focus will be on the states and their economy.
If you look at the data for Nigeria, between 2016, when the economy went into recession, and end of 2017, Imports revived, exports also revived. But as exports continued growing, imports plateaued somewhere. In which case, imports stopped growing. But by 2018, imports also started growing again, along with exports. But something happened last year, and I picked that up from the GDP data. All right? Now, second quarter of 2019, if you profile our foreign trade data, you'll find that the structure of our imports had changed. We no longer spend most of our money on food imports. In fact, for the second quarter of 2019, we spent 41.78% on machinery and transport equipment. So when I saw that number, I went to research it further. You know what I discovered? That taking advantage of opportunities, some Nigerians were importing helicopters here and then exporting the same helicopters to South Africa, to United Arab Emirates, and one other country, because they were taking advantage of the tariff structure, the incentive for transport equipment. So which was well directed. But of course, for them, they saw it as exactly. So it was not ring-fenced. So people therefore will import helicopters here. Instead of having here as the port of destination, they re-export to take advantage of that tariff structure. So that is why there's a big challenge. It's been on, because I've been a part of that convention since 1987. The tariff structure in Nigeria had always been an issue. And until we address that as well, we can't take full advantage of the trade agreement. Neither can we benefit fully, even from border closure as we see today.
Welcome back, and let's continue our conversations as we look at the ProShare Economics report published by the very incisive research team looking at states. And this is very, very important, because when reports are written or published, most times it can identify the challenges, but the solutions may not really be there. But this report has been very robust and looks at what states, the state of economy of states, and looks at how they can address those challenges. So Osun State is the focus today, and we will look at the state. It's located in the southwest region of the nation, and its capital city is Osogbo. The current governor, Boyega Oyetola, is the governor of Osun State. But let's look at the issues around the economy and the opportunities, challenges, and what can be done. Now, yes, to kick off an aggressive rebuilding of Osun economy with limited public financial outflows, the government may need to do the following. Now, this is for all people from Osun State, but investors across the country and outside who have been looking at Osun State should take note of this. They need to take inventory of all idle state government enterprise assets and prepare them for private sector acquisition. We've had discussions on this show with officials of government, and for example, Nasarawa State is looking at this, and we believe Osun State should be taking that into consideration. Idle assets, like the earlier report from the Economics of ProShare, showed that we have over $900 billion worth of idle assets. Imagine if those were properly commercialized or managed, it will create value for the economies at subnational level too. The second is to convert the state's cultural and faith-based advantages into economic opportunities through tourism. Osun State is one of the heritage states in southwest Nigeria. That's where you have Ile-Ife, for those who know about history. That's the whole Oduduwa and the heritage of southwest Nigeria. And so it can really harness its heritage for tourism, and also the fact that it's home to most of the leading Christian leaders in the nation. That will be for another day. I mean, major Christian leaders in the nation are from Osun State. Also, the state needs to upgrade the Ashoke industry into a medium-sized private sector-led joint venture that involves clothing design, manufacturing, fashion fairs, and exports. Patents and copyrights will be obtained by the government and kept as contingent assets. Well, a lot of us know Ashoke, but you know that we've not understood how important it can be converted to an asset that can be valued for economy. The kolanut business of Ede is in a town in Osun State where you have the Polytechnic. Kolanut business there can be upgraded and could form the basis of a major exportable kola nut trade. So it's not just chewing the kola nuts, but it can become exportable trade for Osun State. The real potential of Osun State follows from a clear vision to achieving the following in terms of strategy. Building a state with a strong agri-tech framework that integrates agriculture and technology in a manner that brings about green economy, efficiency, effectiveness, and innovation. Producing agricultural throughputs at globally competitive prices and quality will be important. It will bring revenue streams that reduces the state debt to revenue ratio and improve the IGR to total revenue numbers for Osun State. Improving specialized human capital skills in the areas of agri-tech, mining and commodities, including expertise in commodities trading, product derivatives and forward and futures, contracts trading. This will be very important. The economy of the future is knowledge-based, and reliance on raw commodities and minerals will push the state to the least rewarding end of the future production and service value chains. The state of Osun must prepare itself for the fourth industrial revolution, which is technology and science-driven, acquiring education in the state of Osun to be remodeled in a way that is fit for purpose in an era of disruptive economic competition. There is need for road shows about the state's agricultural resources and mining potential. And recently, Osun State had a summit, an economic summit for those that follow that state. And these are useful as they feed into a narrative that shows how these resources can support a new technological paradigm that creates uncommon value by way of technology. It also needs to leverage its religious and spiritual tourism, a soft aspect of the Osun economy that has been either intentionally or unintentionally been ignored. I would take the the latter one. I won't take the former one. But the state of Osun is known to have the largest number of hills in the southwest associated with allegedly efficacious spiritual essence and power. The various OKs known as magnets for religious faithful seeking communion with God possesses an underlying value that is yet to be explored. Also, festivals like the Osun Oshogbo, those of us that follow history, you know that, and other annual traditional fiestas need to be harnessed in a way that attracts a global tourist audience beyond the present numbers. Religious and spiritual tourism could ignite cash flows well beyond past conservative calculations. Creating industrial clusters and parks with tech incubators that leverage the verdant agricultural landscape of Osun to build digital businesses that scale agricultural marketing is also important. The sales and production comes to play. The agri-tech valley could collaborate with coastal economies to build agricultural export pipelines that are both virtual and physical, that merge into a helix-like interchange of economic value. If structured and implemented properly, the attendant agricultural tourism would create a unique stream of investing and operational cash flows that could organically increase the state's GDP by at least another 10% of 147.5 billion naira based on available National Bureau of Statistics 2018 data. Accelerating industrial development and increased industrial activities are linked to economic growth, trade, market development. As a component of the state's GDP, trade has been largely consistent in its rising trend of contribution to the economic size of the state of Osun. This stands at 5.8% in 2017 from 5.55% in 2014. Trade alone is the third largest contributor to Osun State's GDP and the second largest contributor to the monetary value of service sector output in 2017. The GDP numbers open up a myriad of potential opportunities to investors who are looking at Osun State in the following areas: modern farming, manufacturing, logistics, storage, warehousing, value chain management, tech conference centers, infrastructural development, and amongst others. However, these potential business growth areas depend on new frameworks and not aging fiscal and business growth models of the past. These traditional businesses will need to be reworked within a fourth industrial revolution mindset. The state of Osun will need to rethink the past, reconsider the present, and reimagine its future if it is going to make a success of the transformation of the state's economy between 2020 and 2023. The state's fiscal condition must inspire the confidence of private investors who need to buy into a strong fiscal narrative so that they can match the fiscal discipline and foresight of the state government with the experience and cash of their own. as they align their local business plans with that of the state government. A critical component of the growth strategy for the state of Osun over the next few months should be to drive a rapid socioeconomic data gathering, collation, organization, and analysis process that provides investors with broad and deep data upon which they can base their investment decisions. Indeed, with credible data available for interrogation and review, the business case becomes easier to establish and the cost of attracting foreign and local investors would decline sizably. It must be observed that investors are not philanthropists. They are there to make reasonable returns on their investment, and so the data upon which critical investment decisions are made is fundamental to attracting their money. With the data available and registration and licensing of businesses made easy, the state of Osun should see investments in the following areas if the fourth industrial revolution mindset is adopted: industrial parks and estates, shopping malls, international conference centers, warehousing facilities, commodity storage silos, inland container ports, housing estates, health and religious resorts. The benefit of the limitation of the state of Osun economy in hindsight should strategically spark the required action plans for the new economy with the benefits of foresight. That is very, very important. Well, let's look at the revenue. Osun State's total revenue grew by 26.87% in 2019. Osun recorded total revenue of 42.14 billion naira in 2019, an improvement from total revenue of 33.22 billion naira in 2018. It mainly relies on revenue derived from its FAC. In 2019, its total FAC received was 24.2 billion naira, while its IGR was 17.92 billion naira. In terms of its IGR, Osun State recorded a total IGR of 17.92 billion naira in 2019. The breakdown of the state's IGR reveals that its major source of revenue comes from its ministries, departments, and agencies, while the pay-as-you-earn, was its second main source of revenue. Its MDAs generated a total of 8.75 billion naira in 2019, while it generated a total of 7.85 billion naira from its payee. Domestic debt for Osun State declined to 138.65 billion naira in December 2019 from 148.1 billion naira in December 2018. Given its low level of total revenue, it is expected that its domestic debt might continue to rise in the future. In terms of its external debt, Osun State external debt declined to $95.45 million in December 2019 from $103.26 billion in December 2018. Very interesting insights from Osun State, and we will continue these insights on other states as we look into the new week on the Economy and Politics show. Big thanks to our research team in Persia who do great work publishing incisive reports by Chronomics and other related reports on the economy, finance, and business space. And that will be all for the Economy and Politics show. This week has been an interesting week discussing issues around economy, politics, policy, investments, and amongst others. And we look forward to having a very interesting new week from next week as we continue this conversation. But log on to our website, www.prochange.com, to watch our videos, read our news stories, reports, and analysis to get more insight on what's happening in the world of the economy, finance, investments, and business. Till we come your way again, just note that by 10 a.m. we'll have the market review, and we have an interesting guest in the health and sector who will be discussing around the pharmaceutical industry and May and Baker. So you don't want to miss interview with Mr. Nnamdi Okafor, the Managing Director, Chief Executive of May and Baker Nigeria PLC. That's for 10 a.m. market review. So just stay tuned. But till we come your way again, thank you for watching. Have a nice time and stay safe.